So if you follow me on social media, you might have seen Trainual just raised close to $7 million in a Series A funding. And the biggest question I'm getting from people is, what are you gonna do with the money? I had my first call with the investors yesterday, and they said, do you feel like you've got a big wad of cash burning a hole in your pocket? And I said, no, I feel more like my mom gave me a check and I'm gonna lose it on the school bus and I need to get it to my teacher for the field trip. And they were laughing and said, well, that's the right way to feel about this. The difference is when you've got cash and you're at the mall and you're just looking for ways to spend it, you're in like this spending spree mode where you figure it out when you get there. Whereas if you've got a pre-assigned purpose of what you're gonna do with the cash, which I had to have to raise the money, then you're more afraid that you're gonna do it incorrectly, or you're much more paying attention to the constraints or the confines of how you're gonna spend the money. So how am I gonna spend it? Let me tell you.
You've got to build your business around your life and not your life around your business.
Business ads are going to sell you a fake lifestyle of supercars and fancy mansions.
You can get a business up and running really quickly. All right, so let's kick it off with some of the questions I'm getting on Facebook and Instagram and YouTube and just people texting and calling me. The first one is, how long does this money last you? So when you raise a ton of money, you might think about as an outsider, does that just last forever, or what's the time period? So when you raise funds, typically it's like an 18 to 24 month timeline that you're looking to deploy that money over. So when you see people raise a lot more money, it doesn't mean that they're stretching out their timeline for 10 years. It means that they're doing a lot more with the money to spend it faster. Or when they raise a smaller amount of money, it's because they don't know how they're going to deploy enough of it. So you really only want to raise enough money that you actually know what you're going to do with it, and you can execute on that within about 1.5 to 2 years. Next question I get is, what do you do next? Like at the end of that timeline, then what do you do? We've had employees asking that question. So there's a couple options. I mean, you raise after a Series A, it's called a Series B, not surprisingly. But if you were to raise more funds because you need more cash in the business, there's a next round of financing that comes in from different institutions. They might have a bigger pool of money to put to work, where in order for that money to make sense as an investment for them, they've got to write a much bigger check. So that's why you see when there's angel deals, seed deals, people writing checks for a couple $100,000, that is because that's the level they play at. Then you've got bigger funds that do Series A deals because they can put $1 million or $2 million or $5 million to work. And then you've got bigger institutions or private equity that needs to put 10 or 20 or $30 million to work in a single deal because it takes so much work on their end to go through the diligence with a single company that if they got to the end of that rainbow or the timeline and could only put $2 million to work, they just couldn't get through the size of their fund. So after a Series A is either a Series B, or you've shown enough progress in the business, or you've flipped your model into being profitable and you don't need funds anymore. That's also a path, and it's one that's pretty attractive to me, so we'll see how it plays out. Next question I get is, do you get it all at once, or is this just kind of like dripped into your bank account over time? Great question. So in smaller deals, in seed deals, angel deals, sometimes you have what's called tranches, which means that you accomplish certain milestones, and as you hit those milestones, you get the next check. So that's a way to protect the investor from not just dumping in all of their money at once, and they want you to show some progress along the way. So that's very common, but in larger deals, it's more typical that they just wire the funds directly to you in whole. First, because the investors just believe in you, you're a more mature company. And second, because you're making bigger moves. You're putting that money to work within a year and a half, 2 years. You've already found the product market fit and you know what you're gonna do with that cash. So they don't wanna have to deal with the approvals and back and forth of transfers. And so it's more typical in bigger deals that you just get wired the money all at once. Let's see. I guess the big question is, why are you raising money? Like, what are you gonna do with it? Really, you're raising money to spend it. You're not raising money to have a big padded bank account. You're raising money to spend the money. And so what's Trainual gonna do with it? Growth. That's why you raise money. You know, we were fortunate to build a business that we could be profitable if we were less aggressive with our ad spend. Really, it was just our ad spend that created a burn, which is the money you're losing every month. But if we wanted to grow more organically, we could afford our entire overhead with just the profits from the cash, the business that we were producing. It's a great place to be in when you're raising money, but the reason to take in an influx of cash is because you want to really accelerate your growth. That means you're investing in building teams up more rapidly. You're investing in building your product and innovating more quickly because you want to be ahead of the curve. You're investing in your marketing, that you're going after a wider distribution, more channels, bigger audiences, bigger events, bigger endorsements and sponsorship deals. So all of that is what we're doing with the money. We've got a very detailed budget. We'll talk about that in a separate video, but that's how we're gonna spend the money. So if you have any other questions about fundraising, about what this looks like, the inside of the deal, just let me know. Happy to go through it.